Hello again, this is Scott Tischler with Jericho Capital Group. I'm here to talk to you what I'm going to call the 101 of basics of investing across the board. Most people, when they invest, they think of stocks, mutual funds, bonds, CDs, maybe even a checking and a savings account, or the mattress under their bed. Everyone has their own method of investing. True story, when I did some financial planning in the past, I have had clients that have literally brought in money that smelled like it had been buried in the ground with dirt or under their mattress. So there's a wide range of people and how they choose to invest. Now, just a couple just basic definitions to make it easy so even I can understand. What's a stock? Well, most people, they not really sure what a stock is. A stock is technically have a little bit of ownership in a big giant company. But what does investing in a stock really mean for you? Well, here's the truth. If you invest in a stock, you're giving that large company, let's say Walmart, it's a big company. Usually it's the biggest or number two after Exxon. Those two go toe to toe for the number one in America. But if you give Walmart money by purchasing their stock, you're giving them a loan with no collateral. So you're basically saying, we believe that you're going to do well. We believe you're going to sell a lot of stuff over Christmas, a lot of stuff back to school. So here's our money, and we hope for a return. You have no collateral, okay? You have no preferred return. You're basically giving them a loan. If Walmart succeeds, the stock typically goes up. If Walmart doesn't do well, it goes down, and it can be a good option, but you're giving them a free loan. And last time I went to the bank, they charged me an interest rate from a loan. My mortgage, interest rate on a loan. So it can be a good option, but it's good to understand the definition. What is a bond? A bond is a little bit different, a little bit potentially more securitized. When you give money to, say Walmart does a bond offering, you give Walmart money for a bond, you have a piece of paper that says if Walmart doesn't do well and they go into bankruptcy and they sell off all their parking lots and all their stores, you are going to be the first one to get paid. They have to pay all the bondholders first, and then second, if there's any money left over, the stockholders get money. So if there's no money left over as a stockholder, you get nothing. But as a bondholder, you will get something. However, you don't experience any of the growth. They give you a flat rate of return. They'll give you some fixed rate, like a 4%, a 3%, 6% if they're really looking for money right now in this economy. So you have a little more security, and with security comes typically not as high of an upside potential. What's a mutual fund? A mutual fund is typically a mix of a bunch of stocks and sometimes some stocks and bonds. So instead of just having one company, Walmart, maybe you have Walmart and Target and Exxon and TJ Maxx and McDonald's and keep going down the list. Starbucks, you've got a huge list of stocks. That way, if one does fail, you hope the other ones do well. Now, that's the typical way of investing here in the United States. Some people put their money in CDs, which basically is you're giving money to a bank. They're giving you a fixed rate of return, but you can't touch it usually without some penalties. Then that bank will in turn loan it out for a much higher rate of return, and then they keep the profit and give you a very small portion of the profit. So all three areas that we just looked at, the stocks, the bonds, four areas, mutual funds, and the CDs, basically they're using your money to make money. And that's normal. That's the American way. Well, with private equity firms, we believe that can generate some significant returns to our investors, because instead of borrowing your money, making a massive return and then giving you a small return, we work in conjunction with you to develop a project, and then we share in the returns. So any profit that we make, we share it with you. Instead of giving you just a portion, teeny bit of that profit, our investors have the majority, over 50% ownership in the project. That way, when it makes money, our investors make money with us. And we believe that can be the fastest way to wealth if used correctly. We want you to get wealthy. The wealthier you become, the more money you make, the more projects you're going to want to do with us. If you have a successful and a favorable return with us and experience, then the next project we do, if we give you a call, you're going to want to come join us. Where with the stock market, really it's kind of the buy, hold, and pray strategy right now. You buy it, you hold it, and you hope in 10 or 15 years you can retire. With our strategy, we usually like to get in, get out, get your return, and then invite you to do another project. Please visit us and look at our offerings at jerichocapitalgroup.com. Thank you for listening.